Well, in the 60s and the 70s, India produced around 100 cars per day. Today, that figure stands at around 8,800 cars a day. Clearly, the Indian automobile sector has come a long way from an era where we had a handful of players controlling the market in a cocooned economy to over 44 players today jostling for a piece of the action. And these companies, which include both domestic as well as global players, collectively produced close to around 24 million vehicles. In the year 2014-2015, we had passenger vehicles, two-wheelers, three-wheelers, as well as commercial vehicles. Hello and welcome to this episode, Crack the Code. I'm your host, Nigel D'Souza. The underlying objective of the series is to help you cut through the clutter to become an informed as well as a smart investor. This week, we take a close look at the auto sector, which seems to be the flavor of the season. Before we get into the discussion mode, here is a quick snapshot of the Indian auto sector.
By producing one passenger car every 10 seconds and one two-wheeler every 2 seconds, India has emerged as the second largest two-wheeler maker, 6th largest car manufacturer, and 8th largest commercial vehicle maker in the world. This $92 billion industry contributes 7.1% to India's GDP and provides employment to 19 million people. Several factors have helped to put the sector on fast growth track. They are government's liberalization policy, faster GDP growth, growing disposable income, and easy availability of finance.
Well, against this backdrop, what should an investor look at when considering the auto sector? To discuss this and more, I have with me Prakash Diwan of Altamont Capital Management and analyst Ajay Baga as well as Amrish Palega. Gentlemen, welcome to the show. Let's start off with you then, Ajay. You know, I've been just looking at the Sensex. We're up close to around 5x, I think, in the last 12 to around 13 years. But the auto space, that in fact is up by close to around 10 times. That's clearly indicating outperformance. Do you expect this kind of a trend to move going ahead? And really, what should investors be looking at?
Yeah, see, the mega trend in auto, globally if you see, one is China, both manufacturing and consumption-wise. Then India comes in consumption-wise. We are still very small. Out of about 80 million cars produced globally every year and sold, we are just about 27 lakhs. So 2.7 million is what we are consuming. A huge place to go, 9 cars per 1,000 Indians. So still very big catch-up to be done. Few huge trends. One is the customer centricity is moving from the manufacturer to the Silicon Valley. So technology companies are really playing a bigger role in automobiles and transportation. Second is the data, the digitalization and the aggregate economy. So today you really don't need your own car. You can order an Uber or an Ola or any of the others. That trend is much more stronger in the younger countries like Asia, Africa. And lastly is the regulatory. What we saw with Volkswagen abroad with the Dieselgate, what we saw with NGT coming down on diesel cars, and Toyota also announcing they would postpone a further plant.
All right, you know, Ajay, a lot of points you made for us, and we'll take some of those points forward in the latter part of this discussion. But Amrish, let's come across to you first. You know, we're talking about two-wheeler sector. There's a lot of talk that it's already been penetrated. Right. What's your take on that? Would you still be playing the two-wheeler segment? Do you believe there's more scope for penetration? And between two-wheelers and four-wheelers, what would you go with?
Today, two-wheeler is a necessity, and especially if you're looking at the the rural market, which is where I think it's really going to explode. We have seen that happening in the past, especially when the monsoons were good. This year again, the monsoon has been good. So hopefully over the next couple of quarters, you will actually see the two-wheeler space really exploding as far as the rural area is concerned. So even as of now, one can still be bullish to a certain extent as far as the two-wheeler space is concerned, although like you have some stocks which have moved up. But then, yes, you still have opportunities there.
All right, so plenty of room maybe if we're going to see that rural story play out, then two-wheelers is going to be the name of the game. But Prakash, coming to you then, I'm not going to ask you about two-wheelers or four-wheelers. Auto angs or auto sector?
The idea is to latch on to the right players within that, because it's a huge basket. You know, just to give you an idea, to assemble a car, you virtually have close to about 1,800, 1,900 components going in. And all these are going to be manufactured by somebody or the other.
Yeah.
So every one OEM, you're going to have at least those many component providers. So Nigel, what's important is, as investors, you need to look at what are mission critical component suppliers. The guys who supply the engine shafts and the bearings and things like that are difficult to replace. Whereas a guy who is supplying a tire could get replaced anytime.
Yeah.
And we've seen the success stories which Bharat Forge made because of the kind of work they did only on forgings. Single product, but very critical to the entire value chain. You have a Motherson Sumi, you have a Precol. Small companies also do so well. And some of the Indian players, by the way, are now global in terms of scale, given the kind of expertise that they have, given the kind of demand that's coming. So I think Auto Ants is a great story, and there's still a lot of under-discovered plays out there.
All right, then some valid points, Megan. Ajay, let's come across to you as well before we go into that snappy break. Tell us, you said there's a lot of potential. Give us some numbers. Can auto sector be a lead indicator going ahead as well? Give us some numbers.
Yeah, auto is always a lead indicator, and what has been the disappointment has been the trucks. We thought last year the replacement cycle is coming in, it didn't really take off. So it is a lead indicator that shows the weakness overall in the economy. So overall, how to play this sector, what Prakash was saying, I think auto ancillary is a good place, but remember there are 5,000 companies and they spawn more and more, 350 listed. So just to trace these guys out also is a lot of work. Now the passenger vehicle trucks are largely very capital intensive.
Right.
So they have a lot of entry barriers. On the auto ancillary side, it's not that much of an entry barrier so long as you can get the funding in. So it is a disruptive market to that extent. Business model is changing. So you have to remember that always when you're investing. I think 10-year investments will be difficult in auto going ahead because the business model will disrupt out. We really don't know 5 years down who will be the better car maker. Globally, if you see BMW, Toyota have really led the charge along with Tesla into this digitalization and customer centricity. So you have to see the global situations. Who's the Indian player who's supplying into the global chain? But that you have seen what happens if Nigeria devalues its currency overnight. You see all the players who were supplying into Nigeria fall. And you thought you were playing an Indian, so I hope I have confused you enough with all these points.
All right, so then we'll slip into a short break. We'll try to decode all that confusion, try to get you some stock ideas as well. So don't go anywhere. Stay tuned. Amrish, we're talking about Maruti, a 150,000 crore company today. Tata Motors as well at 10x or thereabouts. The numbers though looked quite good, and various other stocks. So from this entire basket, we have seen stocks like Ashok Leyland as well. I remember it at around 15 rupees, maybe just around 3-4 years ago. Now it's already seen a correction of around 30% from the top.
Absolutely.
So from those clutch of stocks, what would you be looking at, and what would you advise our viewers, Rai, to take a look at it, and what are the key parameters?
No, in fact, I would be looking at the way Indian economy is expected to perform, and which is that one stock which will perform based on the Indian economy's performance going ahead in the next 2 to 3 years. Clearly, looking at the way the infrastructure sector has taken off and the way our economy is expected to perform, I think the LCV and HCVs, the sector will do extremely well. Although you have, a company like Tata Motors in the same segment, but there the performance is more based on GLR than the domestic performance. All
right, Prakash, let's come across to you then. Tata Motors at 10x, some people say it's cheap. I compare with the global peers, and maybe it's not very cheap. But what would your take be on a Tata Motors? And also tell us, from the two-wheeler space, Eicher Motors, what a beauty that's been. I think the bike's fantastic as well. But what about the new models that are coming in? Can it keep pace with what it's done in the past? And what are the other stocks you're looking at from the frontliners?
See, I'll tell you, Nigel, I'll just step back a bit for a few seconds to make people understand the stock selection criteria in terms of allocation. Personal mobility is now a theme as much as public mobility. So you would have the two-wheelers and the passenger cars coming into that.
Right.
So you would have to choose one of those two things and not necessarily both. Okay.
Sure.
The second is, as Ajay mentioned, there's a lot of move towards the Ubers and the Olas. So public mobility, which also includes buses, is a big segment. And in India, we have some very strong players like SML, Isuzu, JBM Auto coming up. So that's a brilliant segment that's developing. The third is going to be the cargo mobility, which is what Amrish mentioned about HCVs and LCVs and things like that. Now, within this entire matrix, what you would need to look at is what stage of the growth our economy is. Now, if you look at Tata Motors is now more of a global play. All of us know that. But they would have a lot of triggers converging to benefit the stock. One is, of course, Jaguar sales have finally overtaken Land Rover sales in terms of change in pace, and that's because of the F-Pace SUV that they launched in UK recently. And they're looking at expanding their assembly lines, and globally they're growing at a much faster clip than a Benz or a BMW or an Audi, for the simple reason that they have various price points which a lot of these German players don't have. The second thing is Tata Motors is also going to benefit from the commercial vehicle uptick whenever it happens. We are talking about emission norms changing next year, April. And a lot of trucks would get sold before that because it's a differential of a lakh and a half if you move to the next level of emission norms. So people will buy those trucks before 31st of March, and that inventory will start picking up sometime maybe December onwards. And of course, the passenger car segment is seeing a huge change in what's called premiumization trends. So even the Indica or the Indigo, if you recall, which was the basic platform that Tata's used, is given way to a much superior vehicle. And same thing's happening in Maruti. Their growth is coming from the Brezzas and the Balenos and the S-Crosses of the world, and not from the Altos and the Zens. So what's likely to happen is you'll have to pick stocks at some stage, and these are no more 5-year stories necessarily. Long term is shrunk to about 2 years because the trends change very dramatically. India has opportunities which are far more superior to the global trends because it's a great market, and I don't see automation or driverless cars happening here very soon because of the kind of traffic that you have, the regulation or the lack of it that you have. So I think it would still be a stock pickers market even in the OEM side.
All right. Just to give our viewers a quick data point, then SUVs, they used to account for only around 2% of the total sales, just around 2011 odd, and today, in fact, it accounts for around 17 to around 19% of total sales. That's SUVs. But Ajay, let's come across to you then. You've seen a couple of howlers in the past. I remember Amtech Auto, the fiasco, it fell from around 180 all the way to around 40. Motherson Sumi as well, there was a bit of a scare. Nonetheless, the stock has recovered. So how would you educate our investors out there? How do you be careful of something like this?
See, you have to look at the debt equity quite clearly, and my one rule is whenever there is a big, somebody goes on a big acquisition spree, sell that stock and run. So, look at the debt equity. Most of these players, you would have got an idea on that. Overstretching, overspending on capital expenditure. We saw that with Ashok Leyland a few years back. We saw with Bharat Forge the kind of extension that they had with going on, and it took them some time to then absorb all that. So again, I'm not giving a buy or sell on any of these, but overall that gives you a very fair idea. So when you're reading the balance sheet, if you can read the balance sheet, start from the notes. You will get a good idea what exactly, and look at the debt equity.
All right, so be careful then. Look at the debt to equity ratios, and be careful about someone who's trying to punch above his weight as well. Let's slip into a short break. You come back, we'll focus on the regulatory concerns in the auto space. Don't go anywhere, stay tuned. Prakash, let's come across to you. Now, there's so much talk about these emission norms, about the scrappage policy, etc. How would you play it? Because there are a lot of pistons out there that people would like to play on. If you're not playing the frontliners, then what's your take on it?
See, what's happening is the regulatory environment is changing very rapidly because we are actually playing catch up with much of the developed markets, whether it's Europe, the US. We've seen emission norms have been fairly lax all this while. But given the kind of rapidity with which that's changing, the companies will have to start getting to adapt to shorter product cycles. There was a time when you would launch a car and for 10 years you wouldn't touch it, except for tweaking it here and there for making some variants. But today the launch cycle and the capex that goes into it, the balance has to be struck today. For example, Maruti spent close to 800 crores to develop the Brezza indigenously. Now, it is supposed to take on all emission norms for the next 8 years. Now, if the emission norms change even faster, then they would have to redo a lot of the designing work. So from that angle, I think what's going to happen is CNG and LPG usage is going to become much faster. So adaptation to that is going to be there. You would have a lot of companies which will have to, like Mahindra's, they don't have a petrol variant in most of the vehicles. They will have to bring probably from the SsangYong stable or whatever they can, and very quickly so to be in the market. Otherwise the NGT bans could probably keep them out of the market completely. Right. The same thing is happening in terms of, if you look at the safety norms. If you look at by next year, middle of next year, you would have to start, and by September 2017, all cars will have to carry airbags. Now, we don't have airbag companies like the Takatas of the world which supply this all across. These are giant companies that make. We just have one small company which is a Dow Chemical Group company, and that's been in the news recently. Now this company would also benefit out of that, but it's not a full-fledged supplier. So you would have to see new companies develop in that space. The other thing that's changing is with newer roads coming up, the ability of vehicles to be able to manage road conditions will mean the tire companies will have to continuously adapt themselves to that. So these are changes that will spur a lot of development and hence a lot of this thing. To be honest, I wouldn't just look at autos while I'm analyzing the auto sector, and you could probably look at a gas company that could benefit if Bombay were to go green, like Delhi has.
Right. Okay, Amrish, let's take that point forward then. There's so much of positive commentary that's coming in from Mr. Gadkari with regard to 2020 is the deadline. We have to start shaping up from 2018. What's your take on that? Are we heading in that direction? And if yes, then what's your take? What's the play in that sector as well?
See, I think the big game changer would be the scrapping policy. Because if you look back, last couple of decades, if one is to buy a vehicle, it was for the lifetime. HCV, LCV users used to use it for about 20-25 years, maybe more. Even now you see whenever a vehicle is sold in tier 1, it goes to tier 2 and then finally to tier 3. So if this scrapping policy comes into play and you need to scrap vehicles after 10 or 15 years of use, I think that itself will increase the sort of demand which is there for, across, whether you talk of passenger vehicles or HCV, LCVs. So I think, going ahead, that would be a major game changer.
All right, Amrish will be a game changer, but I wouldn't be too happy to change my vehicle every 15 years. But we'll leave that for another day. Ajay, you've been talking so much about this Uber, Ola app. What kind of an impact can it have on our markets? Maybe the IT space is not doing well currently, but they're eating into the market share, etc. So tell us. I remember Tesla has come out, launched a vehicle I think a few months ago as well. Do you see it being replicated over here? And what's the impact it's having?
Today, I have people in office who have let go their drivers who are coming at less than auto prices, especially if you take a shared cab. I think that's a mega trend that will work out and that will expand. Again, the funding for that is coming from the private equity. So you mentioned Uber's valuation and all. It's like the e-commerce, and now Ipsos just took out a report that 54% people said we will not buy from e-commerce if we don't get a discount. So actually the $20 billion the PEs have put into Indian e-commerce has actually been a huge monetary stimulus to the Indian consumer. Uber, Ola will do very well with the Indian middle class, but the rich can afford chauffeurs here and they would prefer to keep the cars. So both the markets will continue to grow. All
right, so let's wind this conversation down. Then Amrish, let's come across to you. The key point, the key couple of points that investors, when they're looking at the sector, what should they be looking at on your list, the top 2 points?
One should be looking at the management, especially if you're looking at the ancillary space. I think most of the auto majors, the management is decently good. But if you're looking at the ancillary space, clearly look at the management quality. The other thing, clearly, one should be looking at the sort of growth which is there in that specific subsector.
Right. All right, Prakash, To you then, your top 2 points.
The two parameters that I would request investors to look at before deciding to invest would be track them regularly through the monthly sales. This is one industry that gives you very definite sales numbers on the first of every month. Track that, see the trends, see what's contributing to the growth of companies within all those segments. The second is realizations. When a company starts moving up on the realization curve is when it starts making money. So if that's not happening, and by the way, that's one of the reasons why iShares has always been a darling, because it has tremendous power in terms of realization, and Maruti is now getting it back. So I would believe these two parameters, which are very simple to monitor, should be looked at if you bought the stock or you're looking at buying a stock.
All right, Ajay. Good managements trading at high PEs, still look at them, keep the faith with them, and also debt to equity is in check. What would you advise, our viewers? If all these factors, they're still at high levels, still look at it, stay patient, maybe they'll come out with something positive?
Yeah, I think so, and you have the Indian consumer backing this sector, so that's the biggest push that you're getting with this sector. If they can make a product with a good enough margin, good realizations, as Prakash said, the penetration is so low that you have a multi-year story in this sector. But again, don't be in love with these stocks. You have to change every 2 years. The trend will change. What Ambrish said, trucks, I think trucks have really underperformed for a number of years. That will come through. And with this cash for clunkers, if Mr. Gadkari gets in, they will really take off.
All right, don't fall in love for too long. That's the message that's coming in from Ajay. Thanks so much, Prakash, Ajay, as well as Ambrish, for joining us and, in fact, helping us decode all those facts on the auto space. Well, on that note, it's time to wrap up on this week's episode. Stay tuned as we continue on our quest to learn more about investing wisely. Until next time, thanks for watching.
Focus, ideate, innovate, enable.